thank you everyone for being here. Block Native is a new member of the IOSG portfolio, and we're super happy about that. And I'm going to spend the next 15 minutes or so doing a bit of a lightning talk about block building, MEV, and the state of the network. How I like to open this talk is everybody's eaten something today, and you generally think a little bit about where the food came from that you eat, right? And the reason for that is because you know you are what you eat, right? How many of you have done an Ethereum L1 transaction this calendar year? Raise your hand. Most of us. Have you thought about what actually happens, how it gets on chain, like all the different people who go together? And the reason why I ask is Block Native is a block builder. We're one of the entities that's responsible for getting your transactions on chain post-merge. And what we find is there's generally not a ton of knowledge out there about how Ethereum works at the low block levels. And it has all sorts of profound implications for how your transactions settle and therefore security. So we're just going to jump right in here. I'll talk about block building pre and post merge, fundamentals of MEV, PBS in the wild, and some work we're doing on share the MEV. So blocks are fundamentally the foundation of a blockchain, right? Your transactions get ordered, they get hashed, they get out of the next, they go on. And so therefore, the act of block building is core infrastructure. What folks don't realize for the most part is under proof of work pre-merge, there was about 4 or 5 entities, private, opaque, located in unusual jurisdictions that were entirely responsible for determining the contents and ordering of blocks. These were mining pool operators. And so while there were many computers that were a part of securing the network, just because you had a computer, you were basically, if you were a part of a mining pool, you got handed a block template to mine. So it's one of those surprising things that Ethereum under proof of work at this level was shockingly centralized. And what had actually started to happen is private agreements with sophisticated actors, with mining pool operators for preferential inclusion. And this was viewed as pretty damaging, pretty dangerous for the state of the network. A whole bunch of work happened to correct this and to modify this. And this was addressed most directly at the merge with what's known as PBS, or proposer-builder separation. So under proof of stake at the merge, you have a validator who gets to be tip of the chain. As tip of the chain, they get to propose a block to the network. That makes them the proposer. So it's a little bit confusing. The validator is the proposer. It's a role the validator takes. And the issue is, being at the tip of the chain is very valuable because you can specify ordering. And there are, just like there were mining pools under proof of work, there are staking pools under proof of stake. And some of these staking pools are quite large. They have a lot of resources. And if they started to get good at preferential ordering and sequencing on MEV, that they could build more valuable blocks than other folks could. And as a result of that, they could offer higher staking yield, which would attract more stake. That would get them more resources. That would allow them to get better at building blocks. That would create an irreversible centralization of stake at the core of the network. And this was viewed as an existential threat to the future of Ethereum, this tendency. We'll talk more about this. And so to counteract this, the Ethereum Foundation, in conjunction with an entity called Flashbots, accelerated a program to do proposer-builder separation via an out-of-protocol sidecar known as MEV Boost. So the validator can outsource block production to a network of block builders via this thing called MEV Boost and a relay intermediary. This is what Block Native does. We're a block builder and we're a relay, okay? We compete with other builders for the right to propose a block to the network. And of course, this is all driven by this thing, MEV Boost, MEV, different people say it different ways, which stands for maximal extractable value. This is the value which can be recognized through the explicit manipulation of transaction ordering. And it turns out that this is pretty interesting on multiple levels. So the traditional way of organizing transactions in a block is you have a bunch of transactions, they have different gas prices, and you basically stack rank them. The transaction with the highest gas fee goes at the top, the transaction with the lowest gas fee goes at the bottom, but this carries with it all sorts of negative externalities because you can have gas price wars where you have 2 bots that go to battle with each other. They bid up the price of gas in order to pursue a trading opportunity, and everybody on the network suffers. You have lots of failed transactions that wind up consuming block space and don't do anything. And basically, you have a lot of negative externalities here. And so instead, what happens under MEV is you say, well, look, see this transaction D over here? It's going to introduce an ARB. And an ARB is a price differential of a given asset on two different exchanges, and they're inevitable. Anytime you have a trade, you create price displacement, and by arbitrage opportunities or arbitrage transactions, you level out prices. So you see in the middle, there's an arbitrage transaction, but it's got the same gas price as transaction I. And so therefore, you can't really specify ordering. So what happens with MEV is you actually create a bundle. There's an entity called the searcher, which sounds like a person, but it's really just a bot. And what the searcher does is say, transaction D, put my arbitrage transaction directly behind it, and I'll basically make some profit from it. And what a searcher does is they cut in other folks. They say, look, to make $100, I'll pay a 50 if you order them this way. Okay? This is searching. And there's all sorts of different formats of these MEV transactions. You have front running, where you're trying to get a transaction in front of another transaction. You have sandwiching, where you put a transaction just in front of and just behind another transaction in order to move the price and make a little bit of profit. The bummer of all of this is if your transaction is the one that gets sandwiched, you suffer less favorable settlement. So chances are, if you've ever done a Uniswap transaction in the public mempool, you've been sandwiched. That's where most of them happen. And you can have even suppression or censorship, where you say, we don't want this transaction to get into this block, so we're going to put other transactions in place, and we're going to push it off the bottom of the block. These are all things that happen all the time. They're happening right now as we speak. Very, very common. And what's interesting, while MEV feels a little funky, a little distasteful, they're in fact a fact of life. MEV is common in all ordered transaction systems. We all use search engines. We all know that being in the first slot is more valuable than being in the 12th slot. We're all used to the idea that there's specialized things called SEO, where you manipulate search engine results to try to be at the top so you get more. Very common. Right? We all know that when you buy concert tickets, the sooner you get in, the better tickets you have access to. The later you get in, you don't. These are all examples of preferential ordering in the real world. The big difference in Web3, what makes Web3 so interesting, is it's the only one that is open, transparent. You can see all the stuff happening. So that makes it very different, makes it much more interesting, makes it much more competitive, because in most of these domains, you need to be a very privileged actor to participate and to get value out of MEV. So does it work? So the merge happened on September 15th, about 5.5 months ago. Has PBS been successful? And the answer is absolutely. This I screenshotted yesterday. This is mevboost.org. 96.97% of all blocks on-chain in the past 24 hours had come through third-party block builders like us. Okay? 97% of blocks are being built by external block builders. And there we are right now. You see our relay, we're number 3 overall at the moment. Why? Why do 97% of validators outsource block production? It's very simple. They make a lot more money. Okay? This is another public dashboard called Rated Network. You can see over the past 30 days, MEV Boost or outsourced blocks were more than 400% more valuable than locally built blocks. Turns out it's pretty hard to build valuable blocks, and it requires a whole bunch of specialized skills and infrastructure and compute that entities like Block Native bring to bear. And you can see down here the average transactions included. Vanilla block, self-built, 100. Outsourced block, 154. So basically, like almost double the use of available block space through outsourced transaction, and the execution rewards are like 5x, right? So it's actually really good for the health of the network to have this going, because it's just much more efficient and much easier to get orderly inclusion under this outsourced model. And you can see here, this is total share of MEV Boost blocks by relay. Right at the merge, it was less than 20% and pretty quickly ramped up to over 90%. Why? Because there's economic incentives to do so. This is the whole idea, okay? So the good news is PBS was very successful in creating an outsourced block building market to reduce the risk of irreversible centralized pooling of stake at the core of the network. So that's awesome. It's going pretty well so far, but there's plenty of room for improvement. So we're pretty early into the PBS experiment. It's pretty interesting to see it all unwind. For instance, One of the things you do as a block builder is you bid to win the block, and all the block builders compete every 12 seconds. And so let's say I have a block that's worth 1 ETH of aggregate value. I could bid 1 ETH, meaning all the value in the block I pass to the validator. I get no margin. That's the gray line here. Or let's say all the value in the block is 1 ETH, I bid 0.9 ETH, and I, as a block builder, can keep the difference, 0.1. It's magical. It's amazing. That's the green line, percent of blocks with positive margin. But this red line is pretty surprising. This red line is negative margin or subsidized blocks. I have a block that's worth 1 ETH. I pay 1.1 ETH to get it included. And what's remarkable right now, as we speak at this very moment, about 35% of all blocks on Ethereum are subsidized by builders. Builders are paying more than they're making in order to get a block on chain, which is funny, right? Most of that we believe is due to SEX-DEX arbitrage, centralized exchange to decentralized exchange arbitrage. So they're making money off chain, but it creates some weird economics. And we think that at the core of the network, we want to see positive economics for builders so that you can have sustainable block building behavior across the board. Two, you have about 140 builder addresses active. You have 530,000 530,000 validators, often in staking pools. You have 11 relays in the middle. 11. We're one of them, with no economics. And so the relay is a known centralizing, known trust layer in PBS. The idea is that the relays will go away within protocol or enshrine PBS. That's on the Ethereum roadmap, but best estimates are 3 to 5 years out. You have major staking pools like Coinbase that only connect to 2 relays. Not much relay diversity there. So we think that the relay situation is one that people should pay attention to, and we should be paying attention to the economic incentives at the relay layer. I'm getting the time thing here. So you can see that just 11 MEV boost relays, not great. We want to do better there. Block value is a sum of the transaction fees plus the MEV plus the rate of issuance. At the merge, the rate of issuance went down a ton. This is known as the triple halvening, and the reason why is you didn't need specialized computers, you don't need a whole bunch of power. You can issue ETH at a much lower rate. This is where the ultrasound money meme comes from. But as a consequence of that, the relative economic influence of MEV goes up, because MEV hasn't changed very much, but as a ratio compared to block issuance, it goes up. And you can see this here. The blue is gas fees, the orange is MEV, right? So a surprisingly high percentage of all the value in the block is a result of MEV transactions. The good news, and I'll summarize on this point, block building opens up whole sorts of new avenues for programmable, expressive, and fluid value flows. And if you think about where MEV comes from, it comes from transactions from end users. It comes from you. But you are not aware, nor do you consent to your transaction being part of all of this. And we don't think that's great. Today, the way that things work is your wallet's not MEV aware, your infrastructure's not MEV aware. Unless you're really smart about this stuff, unless you know exactly what to do, you're probably getting less favorable settlement, and all that value goes down to the bottom here, searchers and validators. We think with specialized role of builders and new infrastructure, we could have value recirculate, flow back. As soon as the MEV boost model was announced, we basically said this is a really interesting opportunity, and we started to champion the share the MEV meme. That has since taken off. There's now a lot of folks out there in the ecosystem who are talking about, you know what, MEV should be redistributed to users. It's a more equitable, more fair network, and we're really happy to hear that that's the case. We are putting forward a proposal right now. We're just sort of socializing it here at ETHDenver that we're calling Wallet Boost. The basic idea is a sidecar for wallets that opens up the world of MEV, modeled after the idea of MEV Boost doing it for validators. We'd love your feedback on it. So far, feedback has been pretty encouraging. The Flashbots team has a related one called MEV Share, both worth checking out. But ultimately, that we think this is good for the health of the network. And then finally, just sort of looking ahead, the network has this new role of block builder. Folks like us have very specialized infrastructure, lots of network, lots of compute, lots of storage, and in this economically incentivized model that can be useful in all sorts of other ways. So there's this great article by the Frontier team called Beyond Extraction. That's where this image comes from, where it talks about as a block builder, now you can be a transaction bundle under 4337 account abstraction. You can make data available under 4844 proto-date sharding. We can do gas sponsorship, pre-conf, and more. So that's why we're super excited to be a block builder. That's why we're super excited to be here. We'll have a booth at ETHDenver. And if you have questions about this stuff or want to know more, we'd love to talk. We think it's one of the most interesting aspects of all of Web3. And we're, again, really happy to be here and happy to be part of the IOSG portfolio. So thanks so much for having me. That was exactly 15 minutes.
Yeah, so the question's about the block space auctioning market. Obviously, Flashbots have talked a lot about that, and I'd love to hear what BlockNative has to say about it.
So this is a vast domain. I'm not an expert on everything, but the bottom line is because you have programmable block building, you can auction off block space futures, right? So imagine being able to say, because you have a certain share of the network, I'll sell you block space at a certain price at a date down the line. And so imagine, by the way, we're talking here about like L2s, that they could pre-purchase block space and basically settle down to L1 at a fixed known price, right? Very attractive to them, and therefore also allowing them to settle at very fixed intervals, right? Now, it gets a little funky, as you might imagine, because how can you promise price at certain times? But at the end of the day, the block builders themselves do have preferential access to the network because the block builders in aggregate are the ones who are specifying which transactions get included in at what price, right? So you're going to have market prices, and then you're going to have future prices that need to be fulfilled, and there's going to be perhaps some tension there. So I think that's an interesting space to look at, and all of this is coming, right? Like at the end of the day, block building makes block futures a possibility. There are folks who are actively working on it. That's going to happen. Pre-confirmation is going to happen. Gas abstraction is going to happen. That's all, the table is set for all of that to happen. It's really just a matter of when, and from where we sit as a participant in the market, how healthy is it for the state of the network? That we really wanted to maintain the best ideals of the Ethereum ecosystem, and rather than saying, well, you have a couple of deep-pocketed players who just buy out all the futures and everybody has to go through them, not great. So anyways, a little bit of an overview on block futures. And I know we want to stay back on schedule. So if you have any other questions, I'll be around outside. But again, thanks so much for having me. Cheers.
Thank you, Matt. Thank you for sharing.